We have so much to talk about in today's video following yesterday's Fed meeting. So let's quickly go over some of the things that Powell let us know about. Number one, Powell mentioned that inflation is still an issue. In fact, he really seemed really fixated on inflation, even quoting that the Fed's own projections for inflation kind of need to be thrown in the bin because they really sort of changed here through the course of the end of the year. The second key thing that Powell gave to us was basically is sort of interpreted that the Fed rate cuts are now sort of on hold until we get more progress on inflation data, or if the labor market shows signs of really cooling. And point number three is that the Fed's own projections are for 2 rate cuts next year. So 2 rate cuts coming, here's something to think about. The market hears 2 and it wonders if that means just 1, or the Fed says 2 and they wonder if it's 3. The market is all over the place. But the point here is rate cuts are now not a very strong certainty like perhaps they once were. So our job today is to ask the question, is it time to get long the indices off of the recent sharp dips? Well, I kind of just showed my hand. I did take a long position on the NASDAQ. Or should we continue to be cautious and wait for further dips on things like cryptocurrencies, stocks, indices, etc.? Well, I'm going to go through all of that here today. Now, I just showed my hand a little bit. I did take a long position on the NASDAQ already. This is a position that I've been waiting for a pullback on, but I want to add some context to this. The first thing you have to know about this position that I took is I was waiting for this level of support for some time. In fact, if you've been watching my videos, I'm going to go ahead and pat myself on the back because I have been very, very vocal about being really cautious in this recent rally in the NASDAQ. It was getting really frothy, and to be completely fair, prices are still high for stocks and cryptocurrencies, and everything seems to be priced very richly still. That being said, this sell-off came right down to a key level of support that I've been watching on the NASDAQ for some time, and I chose to pick up a long position. We also had a confirmation from the Edge Finder, so I put my stop loss below structure, and I'm currently in the trade. Now, let me mention something about this. I am still cautious on the market as a whole. I am not outright all in long on the NASDAQ at this level of support. I took a starter position, a small size, and I want to be fully transparent that I would be more willing to add to this position, basically mean I would try again with a fresh setup if we actually fail out and head down to my next key level support around 20,500. I'd probably try a third time at 20,000. So my first attempt long on the NASDAQ is not a huge trade size, but it is a first attempt to get long the NASDAQ after waiting for this pullback so long. It kind of felt good to be validated on my cautionary tale about the recent rip in the NASDAQ. I mean, we're back to levels that we have not seen since early November. So very quickly, you can see how fast and how far the stock market can pull back when things are not a-okay and perfect. And again, yesterday's Fed meeting I don't think is necessarily the end of the world, but it definitely took some of the air out of the chest of all the market bulls that, again, believe that the market just only goes up forever. Even in a bull market, I think timing is important, and waiting for constructive pullbacks can make the difference of making money or chasing things off of a cliff. The S&P 500 also came down to a key level all the way back down to 5880 in just a single day. I mean, that is 6,000 down to 5880. We're seeing a little bit of a bounce, but I would not be surprised if the indices do have more downside to them. That being said, I am bullish indices and have been, but my cautionary tale has been waiting for a proper pullback in some of these things, and I think we're starting to see some good pullbacks that I can actually start to sink my teeth into, dip my feet slowly in. The Dow Jones actually just flew off of a cliff here. I mean, this is a really rough ride here. If you've been watching US 30 or the Dow Jones or, YM on the futures market, whatever you watch for the Dow Jones, it's all the same thing. Thing has been tanking here recently, and this at this point now for the Dow Jones, which is usually a much less volatile index, is down about 6% from the highs, peak to trough here. That's still not a ginormous pullback, but for the for the Dow, that's actually a pretty good sized pullback. If this thing does continue to move lower, there are several sectors that I am watching. One of them is XLV. This is healthcare. I do actually like healthcare as a possible contrarian play going into the new year. I mean, on the longer term basis, healthcare stocks are very profitable entities, but they're a little bit scared right now of what could happen with Donald Trump. I actually think that fear could be an opportunity to pick up healthcare names at low prices. And, here's the thing. When a chart is going down, there's always a scary bearish reason for why that's happening. But I personally think that healthcare stocks going into 2025 have been absolutely hammered. I mean, if we take a look at the healthcare sector, talking about a 14% drop, unless we see a larger scale market correction, I personally think that we're closer to a bottom than we are to the top. I could be right, I could be wrong, but for me personally, I may look to scale into some XLV long positions. This is the healthcare sector ETF. And gold too fell really hard yesterday off of this kind of Fed meeting, which signaled, again, not too many rate cuts for next year, and that is absolutely what gold does not want to hear. We rejected this level of resistance here at 2720 and even fell through support around 2600, which is huge. And one thing I've noticed here today is look at the way this candle on the daily chart is forming. You had a big sharp move up that seems to have been faded so far. We'll see how the candle closes. If you do get a strong close for gold, then perhaps we make our way back into this range kind of that we've been stuck in for the last few months. But right now, man, gold looks like it is really struggling. I wouldn't be surprised, to be honest, if we saw some more short-term bearishness in the gold chart price. But if we do continue to go lower, I've got some ideas that I want to build some longer-term dollar cost averaging bullish positions on gold. And I know I've made this point many times recently, but I'm really going to hammer this in one last time. If you've been watching my videos, you know I've pointed to the put-call ratio as a reason for my concern about chasing the indices. Everybody seems so bullish on the indices, and this was a really good indicator, although the timing was not perfect. As the NASDAQ kept ripping higher, people got more and more confident, continuing to buy calls aggressively. Well, if you have been buying calls the last few days or weeks, those calls lost a lot of value. And this is just a good testament of why sentiment indicators like the ones that we study within the Edge Finder can be so critical to spotting environments where there are a lot of risks, like, again, chasing the NASDAQ off of a cliff. Investor sentiment has also leaned pretty bullish, although there's actually been some rising bearishness in the last few weeks. Still pretty low bearishness compared to bullishness, though. We've also got to talk about the currency moves here recently, but before we look at the charts, check out this retail sentiment chart. I think this is really interesting. All of the dollar crosses just about are very polarized, and retail traders are shorting the dollar like crazy, which is actually super concerning to me. So if we take a look at the Aussie dollar, the Euro dollar, and the Kiwi dollar, you can see that retail traders are heavily long these currency pairs. And yet again, this warning doesn't seem to phase the market. They've been buying this market like crazy and getting absolutely hammered as this thing dropped massively yesterday as the dollar strengthened. I mean, you can't make this stuff up. I've been talking about this on my channel so much recently. Watch your sentiment indicators. When you get these big market moves, trying to fight this is really tempting. A lot of people want to buy the euro because it seems low, but we have been advocating on this channel over and over and over, watch your sentiment indicators, and if you don't have them, you very likely could be leaving money on the table. So I want to tell you just really quick, if you do not have the Edge Finder and you would like to try it out, we'll leave a link in the description down below where you can try it. And if you want to pick up a copy today for a super discounted holiday discount, use the first link in the description. Happy holidays, Merry Christmas. Use that first link, get yourself a copy of the Edge Finder. You deserved it this year. You did great. No, but seriously, it really can be a huge money saver if you have the right data in front of you. I mean, think about how many people would have potentially not tried to buy these pairs if they just had the right sentiment tools in front of them. I mean, we can reverse course and let's look at some things that retail traders are shorting like crazy. The dollar yen and the dollar CAD. I mean, I don't even need to pull these charts up. You guys probably know already where I'm going with this. Look at the dollar yen. Retail is shorting this massively, and we could say the same thing about dollar CAD. So here's my point, is retail traders are absolutely getting smoked by these rallies in the dollar over and over and over. And again, if you just looked at these contrarian signals that we've been getting for the last few months, you probably would have avoided a lot of pain if you're somebody who's just been fighting the dollar trend. So Nick, if you've been so cautious recently, why did you buy the NASDAQ so quickly? Well, I mentioned at the start of this video that I've been waiting for a pullback to this level here for some time. We had this big drift up and then finally the big correction all in one day. Just some context, guys, look at this. This one day of movement gave back how many days of gains? It gave back everything we gained since 41 days ago. So you can see 41 days of work to get up to this point erased in one single day. That is why when you talk about indices, you have to be careful if you trade these things. They move up slowly and they move down very quickly. If you are really good at timing, ideally you'd play the short side and be on the right side of these down moves because you could just make massive returns very quickly. Definitely easier said than done. I personally don't really trade the short side. I look solely for good long opportunities when the market's trending higher. It's been something that's been my bread and butter, and it's worked really well the last few years. Of course, I know we're in a raging bull market and I don't expect it to work that well forever. But that being said, this setup to me, I'm going to be, careful with my risk management. I've got a stop loss below structure, but I just wanted to mention, the seasonality component to this. We're going into the Christmas period, which is historically a really bullish part of the year. I mean, so has November and December been in terms of seasonality. You can see here's on the NASDAQ. If we could zoom in over here, check this out. So right here, we have November numbers and December numbers. These are 10-year averages performance-wise for the NASDAQ. And you can see this year, we've had really exceptional returns in both of these months for the NASDAQ. I think that actually could continue, that we could continue to see a strong end of year close for the NASDAQ despite that big sell-off, as we don't really have any key economic data aside from tomorrow's PCE numbers out of the US, which is an inflation print. Outside of that, I mean, we're really just looking at kind of a quiet Christmas period. And during that time, oftentimes the market drifts higher. Not every year, and there's not a certainty of that, but I am betting I think there's a higher probability that we see a drift up in the indices to close out the year than a continued plummet. And again, I could be wrong about that, but I'm not risking extreme amounts. I'm just risking a small portion of my portfolio. If the market continues to tank, then fine, I have cash at the ready to buy the dip on things that I like within the market. And I mentioned it earlier, but I just want to reiterate that if you don't already have the Edge Finder and you would like to try it, there's a link in the description down below to fill out and apply for a 30-day trial of our software. Thanks for watching, and we'll see you back tomorrow. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.